Hey, hi, good morning to all and happy Friday. So welcome to today's daily dose of market insights brought to you by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So very good morning to all. Today is Friday, 15th of September. All right. So before we start, let's take a look at the disclaimer slides first. All right. So leverage trading is risky. This document is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right. So as usual, these are the three key takeaways that I'd like to share for my daily insights for today. Will be a recap of key events and actions or the in any market in any asset classes that took shape yesterday. Things I look out for today, and as well as the short-term technical outlook on the various asset classes that are actually exhibiting interesting technical configuration. So what happened last night right after the close of the Asia session? So yesterday we have that ECB monetary policy decision. So we in that expectation of that prior ECB news leak reported by media, which is as per se Reuters, that I shared with you earlier on Wednesday and Thursday. ECB actually hiked rate by 25 basis point, but that market view it as a dovish hike. Why? Later I share with you. There are some projection in Eurozone actually is indicating to us there is a risk of what I call stagflation coming into the Eurozone picture, which i.e. there's actually a high chance that yesterday's hike by 25 basis point in the policy rate is more or less the terminal rate, where ECB expected to keep rates on hold for the rest of next year with a potential rate cut coming into the later part of 2024. So that actually saw the euro dollar sold off and broke below our short-term pivotal support at 10707, but that does not lead to a very strong rally in the US dollar across the board. One of the reasons why later I'll share is coming out from China, which I'll share with you all later on. And also do not forget over here is that just a while ago we have the release of China key data as well, which is came in above expectation. So all in all, right, what we could see over here is we do not see a very strong broad-based dollar strength that actually lead to a kind of a risk off in risk off in global equity. All right. So now let's take a look at the ECB monetary policy decision yesterday that came in together with the latest ECB Eurozone economic projection. All right. So now let me share with you my screen first over here. I'm going to highlight. Okay, then let us focus on the screen instead. Okay. So this is what happened ECB height. So this is the projection yesterday. All right, over here. So let me expand my screen so y'all could see it. Okay, so this is a revised economic outlook. Okay, so for inflation, right, the end of next year, they're just expecting it. Okay, so the one that is highlighted in blue was the June forecast. So September forecast was actually the latest forecast that they released yesterday, which is also in line together with the ECB monetary policy announcement of the interest rate hike. So they released it at the same time because yesterday was the quarterly projection release. Okay, so next year the Eurozone inflation is actually to go up 3.2%, above 3% that was forecasted in earlier June. But what's starting over here is the economic growth. So economic growth, previously June they forecast, in the June meeting they forecast to be 1.5, but however in yesterday's meeting they actually downgrade their forecast to 1%. Okay, so all in all, what it means that based on this latest revised economic growth forecast, ECB actually forecasted higher inflationary numbers, hotter inflation number for next year, but growth expected to grow down to 1%, which is quite lower, and before recovering in 2025. So in order to recover in 2025, there must be a rate cut somewhere in between 2024. All right. So what market is expecting over here is yesterday push up is more like a dovish hike instead. So i.e. this could be potentially the last hike by ECB before they actually think of tempering a potential rate cut coming into the later part of next year, given that Eurozone now, based on the latest revised ECB economic outlook forecast, they're actually looking at stagflation. That means higher inflationary growth coupled with lower economic growth. All right. So that actually kind of caused the euro dollar to sell off. So the what interesting over here is the euro dollar sell off. Okay, let me share with you the chart. Okay, so this is the rolling 1-1 performance of the major FX pair. What I include over here is the CNH, the dollar means the Chinese yuan, the Canada dollar, the Aussie dollar, the Sing dollar, and the Kiwi dollar, and the Japanese yen over here. So what you could see over here, yesterday's ECB meeting, yes, it caused the dollar to rally, but it only rallied against the European currency. That means against the euro, the sterling, the Swiss franc, sideways against the Japanese yen. But however, the dollar actually weakened against the commodity-related currency like Kiwi dollar, Canada dollar, and most importantly, it weakened stubbornly against the CNH. So one of the reasons why CNH actually kind of the dollar weakened against the dollar actually starts to weaken against the CNH is because yesterday at the close of the Asia session stock market close, the Chinese PBOC central bank actually enact another second cut of the reserve RR cut, that means the reserve required ratio by China Bank. So by tampering with the reserve ratio, they were actually less likely to do a direct interest rate cut instead. So with that being said over here, with a lower chance of a direct interest rate cut in China, that actually put, we call it a relief on the what I call that US Treasury currently yield premium over China sovereign notes. All right. So that being said, over here is that the Chinese CNH actually kind of have a relief instead of that dollar strength that's being seen in against the European currency. So given the fact that the Chinese yuan is kind of a proxy with the Aussie dollar and the Aussie and the Kiwi. So what we see over here is that the Aussie and the Kiwi also rallied as well together with the Chinese yuan that was seen in the US session overnight and right into today's Asia session. So the Canada dollar actually rallied against the USD. This more likely due to higher oil prices. Therefore, Sing dollar, why Sing dollar didn't actually depreciate so much as what we see in the euro currency against the dollar, because the Sing dollar also has a very close proxy with the Chinese yuan, given the fact that Singapore and China, we do have pretty much close trade ties over the last 5 years. All right. So that being said, over here, let's take a look at some of the data that was released earlier this morning that support the strength in the Chinese yuan against the dollar. So what we could see over here is just a while ago, about an hour ago, before this, where we start to see the PBOC 1 year medium-term lending rate facility, they actually keep it unchanged. So definitely no change for the interest rate for now, because yesterday, like I mentioned earlier, the Chinese central bank chose to actually cut the reserve ratio instead, the reserve required ratio of bank instead, rather than a direct cut on the interest rate. So what we could see now is that the interest rate differential between the US and China is kind of pretty much maintained. So that actually prevent further downside potential on the CNH. That key economic data came in as well. So what we could see, let me refresh over here, the industrial production actually came in already. Okay, so industrial production actually came in much stronger than expectation. Market expecting 3.9%. The exact number came in at 4.5% for August. So that actually also surpassed last July number at 3.7%. And retail sales came in pretty strongly at 4.6%. So that actually almost doubled of last month's 2.5%, which July, and way above expectation of 3%. So that being said, over here is that the risk, given that especially retail sales came in stronger than expected, that means the services industry in China still looks like it's pretty much resilient, given the fact that China in the last 4 or 5 months facing, we call it headwinds by the external demand environment that causes export numbers to be weak. But however, retail sales seems to be still pretty much resilient. So that actually, let's look at the trend over here. Okay, so this is the best number so far in the last 3 months for retail sales. So what we could see over here is that deflationary spiral risk in China has starts to reduce in terms of the latest economic data. So that actually supports, we call that the lesser, we call it minute dollar weakness that being actually exhibited on the CNH. Rather, this dollar strength is only being seen on the European currency. So overall, what I would say that on the FX space, it's more like a mixed bag picture, not a very clear dollar strength in the short term at this point in time, given the fact that even though ECB enacted a dovish hike yesterday. So what is in store for today in terms of the economic calendar after the release of the China key data? So over here, if we go to yes, in Eurozone, there will be President Lagarde will be speaking again at 5:45 p.m. Singapore time. So more or less, I think she will just reintegrate what she actually spoke yesterday after ECB meeting. Then after that, during the US session, we have US industrial production number. That's not so important. Why? Because US is not really a manufacturing hub as per se, but more important will be the sentiment that actually boils down to the services sector in US, which is a primary growth driver in the US economy. So that actually they will come in at 10 p.m. Singapore time. So this is a flash number for the month of September. So as you know, September hasn't ended. So usually Michigan, University of Michigan will actually come out their flash number 2 weeks before the end of September. So that is the sentiment flash number that is out for the month of September. That is out in 10 p.m. Singapore time later today. So these are the key economic data to watch later on throughout the trading session for today. So now let's take a look at the short-term technical outlook on the various asset classes that I share with you all. Let's start with the FX market first. So on the FX market over here, let's start with the dollar yen. So dollar yen, right, still pretty much trading sideways, despite the fact that we see the euro dollar weaken significantly against the euro weakened significantly against the dollar. So not much change with the dollar yen. So still holding below the 1479 key short-term pivotal resistance that we have for yesterday, where we actually have a bearish bias on the dollar yen. So what for today is I will actually add in a kind of a downside trigger level. Okay, at this low over here. So this is the low since Wednesday, which is at 147, almost 147.03. So make it at 147 figure level. So unless we see a clear breakdown below 1470 later, then potentially the dollar yen could actually dip much lower to retest the 20-day MA at 146.30. But however, if we start to see a pierce or a clearance above 147.90 key short-term pivotal resistance, then this short-term bearish bias on the dollar yen will be invalidated to see a squeeze up towards the key medium-term resistance zone at 14840 slash 14885. Okay, now given the fact that the dollar CNH has starts to kind of taper off its bullish momentum, so that actually benefited the Aussie dollar. So recall that the Aussie dollar about 2 days ago, we have a neutrality bias, given the fact that the dollar CNH is not exhibiting much. That means the Chinese yuan is not exhibiting much weakness against the dollar. So for today's, the Aussie dollar actually managed to pierce up above 64.50, which is the upper neutrality limit that we set up for 2 days ago, and also clearing above the 20-day moving average. So bear in mind, this is the 1 hour chart. So what I did over here is that in TradingView, we're able to overlay a higher time frame moving average on a shorter time frame chart, kind of doing a multi time frame analysis on a single chart. All right. So given the pierce up of 64.50 and the break above the 20-day moving average, so we will have a short-term bullish bias for today on the Aussie dollar. That means the Aussie versus the dollar, holding above 64 figure key short-term pivotal support level, looking for a potential push up to retest the 1st of September and 31st of August swing high area at 65.10. Above 65.10, potentially could see the next resistance coming in at 65.55. We saw confluence with the 50-day moving average. All right. However, if we start to see a breakdown below 64 figure level, then this short-term bullish a breakdown below the 64 figure short-term pivotal support level for today, then this short-term bullish bias will be invalidated to see a push down to retest Thursday swing low at last Thursday and last Wednesday swing low at 63 60, which is the next intermediate support level. So switching to a short-term bullish bias on the Aussie dollar. All right, so now moving that will be the euro dollar. So let's see what happened to the euro dollar last night. So euro dollar actually broke down below that 1.0707 key short-term pivotal support. It broke down and also broke down the 10670 level as well. This was actually the swing low area of previously in May and June this year. So what we could see over here is that the euro dollar in short term is now oscillating within a short term descending channel that is drawing from the high of 30th of August. So what we could see over here is that hourly RSI has started to actually hitting a relatively extreme overbought level that was not seen since the start of this month. So now trying to actually reintegrate back towards the above 30 means from the oversold pardon me, what I said over just now is the hourly RSI had hit down to a relatively extreme oversold level. So this oversold level is the deepest since the start of this month, which is 6th of September, where the deepest so far. And right now it's trying to inch upward and go back above 30. That means because going back above the level that is not deemed as extreme oversold. So i.e. what it means that potentially after this steep downfall of the euro dollar C yesterday, there could be a potential minor pullback, but this pullback likely it will be capped at 10670, maximum 10707 key short-term pivotal resistance that I have for today. So because there's no clear bullish divergence that is being exhibited on the RSI. So what I mean by divergence, what you could see over here is that very clearly this is this low and this low here. This will be the lower low. The RSI is not showing a higher low, it's simply flashing a lower low as well. So no bullish divergence on the RSI. So likely any we call it mean reversion from this extreme oversold level will likely see only a minor bounce. So I'm looking for a bounce area at 1067, potentially maximum 1.0707. So that is the key short-term pivotal resistance I have for the euro dollar. So if this level is not being surpassed for today, very likely the euro dollar should continue resuming its short-term downtrend within this short-term descending channel towards the next support level at 1.0585, which is so close to the lower boundary of this short-term descending channel. However, if we start to see a breakup above 1.0707, then this short-term bearish bias on the euro dollar will be invalidated for today to see a squeeze up to retest this week high at 1.0770. That's for the euro dollar. So now that will be the FX market for today. So pretty much a mixed bag for the FX market, not a very clear what you call it, dollar strength story. So the dollar strength story is being only exhibited in the European currency. So with that, okay, before I talk about the FX end of the FX space, let's take a look at the Swiss yen. So Swiss yen was highlighted yesterday. We do have a bearish bias holding below 165.60. So price action of the Swiss yen continue to trace a lower high yesterday. So still no change, still maintaining that bearish bias below that 65.60. Also price action also shipping that lower high below that 20-day moving average. So maintaining that bearish bias towards 163.80 on the Swiss yen. So that's the next intermediate support level to watch, which is all the 50-day MA. But however, a break up above 65.60 will invalidate this bearish bias on the Swiss yen to see a squeeze up to test that 22nd of August and 30th of August swing high at 166.60 level. All right, so without further ado, let's us now move on to the next asset classes that I'll cover. So will be the stock indices. All right, so for the stock indices over here, let us go on to the Asia stock indices first. So for the Asia stock indices at this point in time, if you look at the Japanese yen, the Japan 225 or the Nikkei 225. So Nikkei 225 yesterday, we actually have a bullish bias to see the Nikkei 225 or Japan 225 to hit the resistance at 34,490. So 34,490 is actually this minus swing high area of 1st of August. So right now, the Japanese yen, if you look at it, or the Japan 225, pardon me about tongue twisting, the Japan 225 is now approaching another key intermediate resistance at 33.80. So what is 33.80? 33.80 is in fact over here the swing high area of 21st of July and 3rd of July this year. And if you look at the RSI right now is pretty much at a extreme overbought level, and this extreme overbought level is almost hitting the previous peak on 27th of July. All right, so all in all, there is no bearish divergence on the RSI shaping higher, also sloping outwards in line with the price action, except the fact that it's at a very relatively extreme overbought level. So all in all, right, we may start to see a bit of consolidation instead right now, rather than a pullback taking shape, because there's no a corrective decline or corrective pullback, because there is no clear or no sign of bearish divergence on the RSI. So I do not want to advocate a bearish counter trend trading setup right now in the short term. So I rather neutral instead between 33,800 and 33,490, which was the resistance, now turns into a pullback support, minor pullback support level. Unless a breakdown below 33,490, then potentially we could see that counter trend mean reversion pullback towards this former swing high area of 5th of September and 6th of September, now turns into a pullback support at 33,285. All right, but however, if we start to see a squeeze up above 33,800, then this we call it a very strong bullish acceleration should continue towards the next resistance level at 34,001, 34,015 level, which is this this last 16th of June high at 16th of June 2023 high, which is also the 34 or 33-year high on the Japan 225. So turning neutral on the Japan 225 for today, given relatively extreme overbought level in the current rally that is being seen over here. Now, going on to the Hang Seng Index or the Hong Kong 33. So Hong Kong 33 yesterday, we have a neutral a bias yesterday. So early this morning, very clearly, it broke out above the upper neutrality limit at this 18,290 18,300 level or 18,320 level that we set yesterday. So we actually now turn bullish. So having a short-term bullish bias for today, holding above for sure this clear key short-term support level that was being maintained since 12th of September this week. So we'll be at support at 17,930. So having 17,930 as a key short-term pivotal support, looking for a further potential push up to actually see this short-term bullish bias play out on the Hong Kong 33 towards the next resistance at 18,530, followed by 18,840 level, which is also the pullback line of this former minor ascending trend line support turns into pullback resistance, and as well as the 50-day moving average, all acting as a resistance at this 18,840 level. Okay, but however, if we start to see a breakdown below 17,930 pivotal support for today, then this short-term bullish bias will be invalidated to see a test at 17,790, followed by the swing low area of 21st of August at 17,570. Okay, so all in all, turning bullish bias on the Hong Kong 33 index, given the fact that the price action or the elements has turned positive in today's Asia session. Then now, still recall the German 30 right now. So German 30 yesterday, we have a short-term bullish bias yesterday. Yes, the German 30 squeezed up as intended, so already hit the first resistance that we have yesterday, which was the swing high on Monday at 15,860 level. So now approaching the 50-day moving average. So that was the second resistance that we have yesterday at 15,940. RSI now coming very close to the overbought level. So all in all, right, potentially, given this steep move over here, there could be a potential pullback for today. So what I have over here is that for the German 30, short-term bearish bias below 16,045 key short-term pivotal resistance level, looking for at least a potential pullback towards 15,770 intermediate near-term support level. Only a break below this support level then could see a further downside move back towards 15,700 and 15,570. So that was the swing low of this week. This week low so far also correspond to last Friday's swing low. So all in all, right, having a short-term bearish bias on the German 30 given yesterday's steep up move below 16,000 45 key short-term pivotal resistance. But however, if price action going to break up above 16,045 level, then this German 30 will continue to see a squeeze up towards the next resistance at 16,240 level, which is also close to the 76.4 Fibo retracement of that reason now down move from 31st of July to 18th of August. All right. Now, to the US stock indices. So the US stock indices yesterday is pretty much driven rather positive. So all the US stock indices closed positive yesterday. The SPX closed up 0.84%, the Nasdaq 0.82%, the Dow Jones Industrial Average almost up 1%, the Russell 2000 up 1.4%, all thanks up to the ARM IPO. So yesterday, ARM is actually one of the key major semiconductor player in globally. So ARM IPO price yesterday in the Nasdaq composite. So what you see over here is the ARM IPO has a very strong sterling outperformance. They're actually up by 25% yesterday. So it's a pretty much bullish optimism that start to spread out throughout the major US stock indices. So with that, right, the technical configuration on the US market will be pretty much neutral for today. So the SPX, the Dow Jones Industrial Average, this will be the Dow Jones, the 1 hour chart, US Wall Street 30 managed to do a squeeze up above the 50-day moving average that was yesterday's key short-term pivotal resistance that I have. So that short-term bullish, the short-term bearish bias, pardon me, a bit of tongue twisting, the short-term bearish bias has been invalidated. So I will turn neutral between the swing high area of 16th of August and 31st of August at 35,050, and also yesterday's squeeze up area now turns into a pullback support level at 34,760. So neutral between these two levels, 35,050 followed by 34,760, unless we see a breakdown below 34,760, then the short-term bearish bias will be reinstated to see a push down towards this week swing low area at 34,520 level. So having a neutrality stance on the US Wall Street 30 index. So now moving on to the Nasdaq 100. So Nasdaq 100, despite the fact that it's still holding below the 15,550 key short-term pivotal resistance that we have for yesterday, but price action seems to be a bit mixed right now. There's no signs of a clear exhaustion yet on the US Nasdaq 100. So I will prefer to turn neutral for today between 15,630 and yesterday's swing low at 15,000. Yesterday's we call it yesterday's US session low at 15,360. So neutral between 15,630 and 15,360. Unless we start to see a breakdown below 15,360, then we will reinstate this short-term bearish bias to actually test last Thursday swing low at 15,170 level. So having a more neutrality sense on the major benchmark US stock indices for today, given the fact that there is no clear bearish element right now. Okay, now moving on, one more index of the share over here is that the commodity will be the gold price. So gold price over here, what we could see is that it start to see a strong push up from the major ascending channel support that is in place since 3rd of November 2022 low, a very strong push up. And this strong push up over here, what do we see? Very interestingly, price actions start to shape a lower low, but however, the RSI starts to shape a higher high. So this is what I call a bullish divergence, indicating to us that the recent steep fall since the start of the recent short-term fall decline since the start of this week, the bearish momentum has more or less been negated, and potentially we may start to see a higher price action, at least in the short term, to short term, we talk about short term would be 1 to 3 days on the spot gold, that means the XAU/USD. So I'll be using 1903 as a key short term pivotal a support level, looking for a potential push to test 1918, which is also the 200-day moving average. A break above potentially could take us up to last Friday's swing high area, now acting as a minor resistance at 1928/1932. 1932 will be the upper limit, which is the 50-day moving average, acting as a resistance. So we call it having a short-term bullish bias on gold holding above 1903, given the fact that there is some signs of bullish elements that has started to exhibit in the prices of gold. So, but however, if we start to see a breakdown below 1903, then this short-term bullish bias will be invalidated to see a further push down on gold price to retest the 18th of August and 21st of August swing low area, acting as a next support level at 1885 level for gold. So with that, we come to the 30-minute mark. So I'll end today's session. So do have a great day ahead, and as well have a good weekend. And we shall speak again on next Monday. Thank you.